Why don't governments like cryptocurrency? Because you can't print more of it when you run out. Welcome to our channel, where we demystify cryptocurrency for everyone. In the digital age, cryptocurrencies have emerged as a new form of money, carving out their space in the financial landscape. Born from complex algorithms and secured by cryptography, these digital assets are more than just a trend. They represent a revolution in how we perceive and use money. Imagine a currency that's not controlled by any central authority, like a government or a bank. It's purely digital, can be sent or received anywhere in the world, and its transactions are recorded on a public ledger called a blockchain. That's cryptocurrency for you. But as exciting as they are, cryptocurrencies can be a bit daunting to understand and invest in. That's where we come in. Now that we have an idea about cryptocurrency, let's dive into a popular investment strategy involving it, known as dollar cost averaging. Dollar cost averaging, also known as DCA, sounds like a complicated term, doesn't it? But worry not, it's simpler than you might think. Imagine this. You're at a marketplace where the prices of goods fluctuate every day. One day, you buy an apple for $1. The next day, the price drops to 50 cents, so you buy two. On the third day, the price goes up to 75 cents, and you buy one more. Over these 3 days, you've bought 4 apples for a total of $2.25. That means, on average, you've paid approximately 56 cents per apple. This, in essence, is dollar cost averaging. In the world of investments, DCA is a strategy where you invest a fixed amount of money in a particular asset at regular intervals, regardless of its price. So instead of trying to time the market and guess when the prices will be low or high, you consistently invest the same amount of money over time. This could be weekly, monthly, or quarterly, depending on your investment strategy. Let's say you decide to invest $100 in cryptocurrency every month. In January, the price of 1 unit is $10, so you get 10 units. In February, the price drops to $5 and you get 20 units. In March, the price rises to $20 and you get 5 units. So over these 3 months, you've acquired 35 units for a total of $300, which means on average, you've paid approximately $8.57 per unit. This is the power of dollar cost averaging. DCA is like setting your investments on autopilot. It eliminates the stress and guesswork of trying to time the market, and it helps to spread the risk over a longer period. It's a disciplined approach that focuses on the long-term growth potential of your investments, rather than the short-term price fluctuations. So, we see that DCA is all about making regular investments over time, regardless of the price. But why should you consider it? Let's find out. Now, why should you consider dollar cost averaging in your investment strategy? Well, there are several reasons. First up, dollar cost averaging, or DCA, reduces the impact of volatility. No doubt the world of cryptocurrency is a roller coaster ride. One day you're up, the next day you're down. It's enough to make anyone dizzy. But here's where DCA shines. By spreading out your investments over time, you soften the blow of those highs and lows. Instead of betting it all on red and hoping for the best, you're making smaller, more manageable investments at regular intervals. This way, you're less affected by sudden market downturns. Next, DCA removes the need for timing the market. Let's be honest, timing the market is a bit like trying to catch a falling knife. It's risky and, more often than not, it doesn't end well. With DCA, you don't need to worry about when's the perfect time to buy. Instead, you invest a fixed amount at regular intervals, regardless of the price. This way, you buy more when the price is low and less when the price is high, averaging out the cost over time. Finally, DCA promotes disciplined investing. It's easy to get carried away in the hype of cryptocurrency. One minute everyone's talking about Bitcoin, the next it's Ethereum, then it's Dogecoin. But with DCA, you stick to a plan. You decide how much to invest and when, and then you stick to it. It's a slow and steady approach, but as the old saying goes, slow and steady wins the race. In sum, DCA is a strategy that helps you to navigate the choppy waters of cryptocurrency investing. It reduces volatility, removes the need for market timing, and promotes disciplined investing. So, DCA seems to have quite a few advantages. But how do you actually use it? Let's explore. Using dollar cost averaging in your investment strategy is pretty straightforward. Now let's dive into the mechanics of dollar cost averaging, or DCA. It's like being on a diet, but instead of counting calories, you're counting dollars and cents. It's about discipline and consistency. With DCA, you start by deciding how much you want to invest and over what period. It could be every week, every month, or even every quarter. What's crucial is that it's a regular, consistent amount. Imagine you've decided to invest $100 into a cryptocurrency every month. You're not worried about whether the price is high or low on any given day. Why? Because you're playing the long game. You're not trying to time the market, you're trying to tame it. So, on the first of each month, you buy $100 worth of your chosen cryptocurrency. Some months, when prices are high, you'll get less of the cryptocurrency for your $100. But when prices are low, you'll get more. Over time, these ups and downs average out. That's the beauty of DCA. It's crucial to stick to your plan. Consistency is key here. Don't be tempted to invest more when prices are low, thinking you'll get a bargain. And don't hold back when prices are high, fearing a loss. Remember, you're in this for the long haul. Dollar cost averaging is not about making a quick buck. It's about reducing the risk and smoothing out the volatility of the market. It's a method that favors patience and discipline over guts and guesswork. And here's a tip: automate your investments. Many platforms allow you to set up automatic purchases so you don't have to remember to make your investment every time. It's a handy way to ensure you stick to your plan. That's how you can use DCA in your investment strategy. But is it always the best method? Let's see. While dollar cost averaging has its advantages, it's not the only investment strategy out there. Indeed, the world of investing is as varied as the people who invest. Consider the buy and hold method, where investors purchase cryptocurrency and hold on to it, regardless of market fluctuations. This strategy is based on the belief that in the long run, the market will invariably rise. It's simple, requires little management, and has proven successful for many. However, it's not without its pitfalls. The market's unpredictability can lead to substantial losses, and it requires a lot of patience and nerves of steel. Then, there's market timing, an approach where investors try to predict market highs and lows. When done right, this strategy can yield substantial returns. But as enticing as it sounds, it's a high-risk game. Predicting the market accurately is notoriously difficult, and even seasoned investors often get it wrong. We also have value investing, which involves seeking out undervalued cryptocurrencies. The idea here is to find hidden gems that the market has overlooked, buy them at a low price, and wait for the market to realize their true value. It's a strategy that requires a deep understanding of the market and a keen eye for value. But it's also a strategy that can pay off handsomely if you're right. And let's not forget momentum investing, where investors buy cryptocurrencies that have been rising in price and sell those that have been falling. It's a strategy that rides on the belief that the trend is your friend. While it can be profitable in a bullish market, it can lead to significant losses in a bearish one. Each of these strategies, like dollar cost averaging, has its own set of advantages and disadvantages. They require different levels of knowledge, risk tolerance, and time commitment. So, how do you choose the right strategy? Well, that depends on you, your financial goals, your risk tolerance, and the time you're willing to commit to managing your investments. As we see, every investment strategy has its own merits and demerits. The key is to choose what works best for you. Still not convinced about dollar cost averaging? Let's take a look at a real-life success story. Meet Bob, a school teacher with a passion for investing. Bob wasn't rich, but he had a plan. He started investing small amounts in a diverse range of stocks every month, no matter the market conditions. This strategy? You guessed it, dollar cost averaging. Bob maintained his consistency, unswayed by market highs and lows. He did this religiously for over 30 years. The result? Bob retired comfortably, with a portfolio that would make many professional investors green with envy. His secret? The simple, disciplined approach of dollar cost averaging. This tale of Bob is not unique. There are countless Bobs out there, reaping the rewards of this steadfast method. So we see how dollar cost averaging can work wonders for long-term investments. But the journey doesn't end here. We've covered a lot today, from what dollar cost averaging is, to how to use it, and even some of its advantages. We've journeyed through the intricate world of cryptocurrency, unearthing the benefits of this systematic investment strategy. We've uncovered how dollar cost averaging can help shield us from the unpredictable waves of the crypto market, offering us a safer passage through its stormy seas. We've also seen how it stacks up against other investment strategies, offering a unique blend of simplicity, flexibility, and risk management. And we've heard an inspiring tale from history, a testament to the power of consistent and disciplined investing. So as we wrap up, remember the power lies in your hands. The crypto world is yours to explore, and dollar cost averaging could be your trusty compass guiding you through it. Thanks for watching. If you want to learn more about cryptocurrency, consider watching our other videos, and don't forget to share your experiences with DCA in the comments section below. Until next time, happy investing. I'm Joshua Carnival, and this is my channel. Let us know by like if something from this video was new or important for you. Comment below with any topic that sparks your curiosity or ignites your passion, and let's dive deeper together. Your voice matters. Stay tuned for a whirlwind of captivating content. Your journey with us is just beginning. Hit subscribe and brace yourself for a wild ride.